Welcome back, everyone. Gold finished the previous week on a high note but failed to impress with its price action as it did not break outside the range it has been trading within for the past weeks. However, the previous week covered some interesting events that are worth investigating further as they could have provided hints for the future direction of the gold market. This report will also be looking into the events in store for the week ahead, as our closing gold's technical analysis will be provided with our personal observations and important levels identified. We make a start first with the latest FOMC meeting that took place on the 28th of July during the American session. In the Fed's accompanying statement, very few changes were noticed, yet the US Central Bank seems to be more confident for the future as it noted that progress had been made towards its goals. However, the bank's chairman, Jerome Powell, was quite dovish in his press conference as he stated that the economy has still some ground to cover and that the Fed was a ways away from hiking rates. The comments may have created momentary notable volatility as the press conference commenced, and the effect was felt after the event also. The USD took a consecutive dive in the next hourly sessions as Powell's comments were not taken lightly. Powell's comments basically reversed the positive tone of the statement, creating a counter reaction. Yet, the situation greatly favored gold that captured an upward run that continued into the next day. This could be an indication that the gold market seems to gravitate more towards caution outlooks on the economy and not the optimistic view. This can also be evidence that the US and generally the global economy remains in a very sensitive position at the moment, with the pandemic slowly retreating. On the following day, the 29th of July, we saw a very similar situation unfolding in the markets, with the US dollar falling and gold taking advantage to the upside. This market reaction may have been a result of the release of the GDP advance rate for Q2. Despite the US economy expanding by 6.5% quarter on quarter, the preliminary US GDP rate for the second quarter disappointed traders as it missed its target of 8.5% quarter on quarter on an annualized basis, as was expected by the markets. At this point, it could be useful to note that the market's expectations on the economy may have been exaggerated by the forecasted readings, sending traders into a mini overreaction. As a conclusion, in the following days, market participants have a rather upbeat economic calendar that could move the financial markets across the board. On the 4th of August, we get the ISM non-manufacturing figure for July, and Dallas Fed President Robert Kaplan will speak with Reuters in an exclusive interview. On the 5th of August, we get the weekly initial jobless claims figure, while on the 6th of August, Friday, we get the star event of the week with the US employment report for July to be released in the US session. This event could produce significant market volatility for gold's price, and traders are advised to be mindful of the risks. Moving now to our technical analysis, please note this is gold's 4-hour chart. Starting first with the most notable resistance line for the yellow metal, noted as the R3 1833 resistance. This level is the highest level reached since late June, making it a ceiling for the bulls until now. Lower than that, the R2 1824.35 resistance can also act as a challenge for the buyers or even a temporary stop for a reversal. The R1, which has been tested in the most recent 4-hour sessions, is also a rather solid line which can be used as a barometer for the bull's strength. Yet, our first support is noted at the S1 1805 level. The S1 has been used frequently in July and remains very relevant to the recent price action. Lower, we could find the S2 1795 level, which is the most decisive support line we have noted, as the price action had attempted to break it various times in the past weeks but was unable to do so. Its solid base enabled it to withhold its ground, implying traders are aware of it. Our final support, the S3 1785, was last seen at the start of July, but we tend to note it as a metric for the bear's strength. At the moment, we keep a sideways bias for gold, which stretches between the R3 1833 resistance and the S2 1795 support. The trend can arguably be considered by the help of our RSI indicator below our chart, which is running at 45, implying some ambiguity among traders. That's the end of the support. We thank you very much for your time and focus. We appreciate your participation, and if you like this video, please feel free to share and subscribe. Please note, as an effort to support traders on as many fronts as possible, we are now presenting live weekly webinars on trending subjects, and all our subscribers are welcome to participate. From everyone here at IronFX, wishes for solid trading.